2017 and 2018 marked two of the costliest back-to-back years for global natural catastrophes on record. While the overall economic cost was more than $690 billion, just 35%, or roughly $240 billion, was actually covered by insurance. As we looked at things like climate risk and how people are moving into historically unpopulated areas, this gap of more than $450 billion of what insurance does and does not cover really is significant. The implications of this gap are not only financial in scope, but they also jeopardize the overall resiliency in developed and emerging markets. The U.S. is particularly vulnerable as it relates to the flood peril. For both coastal and inland areas, the amount of people exposed to flood risk far exceeds the amount of insurance currently in place to adequately cover the risk. So in the broader context, I agree that catastrophe risk continues to evolve. We're continuing to see a combination of factors that are enhancing the impact of these catastrophic events. Things like socioeconomics, shifts in population, especially in vulnerable locations like coastal areas or areas that may be more prone to wildfires. And there's other things that like more intense weather-driven catastrophe cycles, and certainly there's a climate change influence to all of this as well. Each of these are making it more important than ever to engage in conversations about loss mitigation and resilience. So we're part of the Resilience Project because things like knowledge, awareness, and a data-driven understanding of risk really is vital to preparing for and mitigating the damage caused by these future events. Here at Aon, we create value by embracing data and extracting insights from historical event scenarios to build plans of actions so communities can become more resilient. In partnership with other stakeholders across the public and private sectors, our industry can and will play a key role through financial preparedness and a much deeper understanding of the hazards.